Hello, T-traders. At the beginning of the week, all the headlines have been caught by the news from the Middle East. After the US issued its labor market report on Friday, stock exchanges slightly recovered. Today, some assets continue to attract investors. Let us take a closer look at today's trading session in Asia. Geopolitical risks boosted oil and gold prices, thus allowing stocks in Australia and New Zealand to gain in value. In Hong Kong, a trading session was stopped because of typhoon. Meanwhile, in South Korea and Japan, markets are closed amid the celebration of national holidays. Traders in the United States and Canada are still on long weekends. In China, the situation is the opposite. Traders have returned to markets after week-long holidays. What's more, today China has issued its currency reserves report, which showed a 10-month low. It seems that the Chinese authorities have spent a lot to support a constantly falling yuan. Today, after the end of Chinese Golden Week, the average price of the yuan has exceeded the previous weeks by 9 pips. Meanwhile, a possible rise in the US dollar could become a great problem for China. It's still unknown when the Chinese yuan will be able to stay at the needed level without additional stimulus. Notably, the country's gold reserves are dwindling. Earlier today, the US dollar gained in value as a safe haven asset. On a Friday, the US dollar index inched down amid mixed data on the US labor market, and today it has climbed to 106.5 points. During the Asian session, the US dollar was trading within the range of 106.10 and 106.40 points against a basket of 6 major currencies. Nevertheless, the greenback lacks bullish momentum. The fact is that traders are waiting for additional signals of a possible key rate hike by the Fed. Until recently, the macroeconomic data suggested one more rise this year. These expectations are boosting the yield of the US bonds and thus pushing up the greenback. Thus, on a Friday, the 10-year bonds reached the highest yield level since 2007. The increase stopped at the level of 4.8%. Notably, some traders decided not to bet on a new key rate hike. As a result, the US dollar lost almost 1% against a basket of other major during the last 3 sessions. The yen also lost value as a safe haven currency. Demand for the Japanese currency surged amid a conflict in the Middle East. After a slump on a Friday, the yen continues trading within the range of 148.90 and 149.30, still staying near its 11-month high. Curiously, the US dollar and gold are the most preferred safe haven assets. On the chart, we see that the yen dropped to 147. Analysts explain such a movement as the result of the intervention of Japanese authorities in the forex market. However, recent data published by the Bank of Japan showed that there were no buying operations on the yen. The antipodian currencies are also falling today. Traders are avoiding risky assets, and that's why the Australian dollar is under the influence of a bearish momentum. During the Asian trade, it was hovering near 0.6350, and the currency was consolidating within a narrow range of 0.6342 and 0.6386. The decline could have been even more noticeable, but the currency is supported by high commodity prices. What's more, Australia has taken responsibility for ensuring a stable commodity supply to Japan. This agreement will allow the creation of a reliable investment area in the resource and energy sectors of Australia. This, in turn, will have a positive effect on the country's currency. The New Zealand dollar is showing almost the same dynamic as its Australian counterpart. It was also trading sideways within the narrow channel of 0.5960 and 0.5992. Notably, the country is planning to hold general elections on October 14. In this slide, stock market traders prefer to remain calm. Today, the losses of the New Zealand dollar were limited by the resumption of trading in China after the Golden Week holidays. As a result, the currency closed the trading session near 0.5800. This is how trading began in the Asian-Pacific region. This is all for now. You watched the video review with me, Kate Stichina, and we are always happy to receive feedback from you. Write your questions and comments under this video. Stay tuned and you will find a lot of interesting information. See you in a few hours.